Okay, Richard, I think it's all yours.
Okay, thanks, Anil. We'll probably have some folks join us as we go, but I think in interest of time and respecting the schedule, I think we'll get started. Still hearing that paper shuffling. Not sure if others are. So, good afternoon, everyone, and welcome to GrantBook Spotlight webinar series on topics of interest to foundations and other grant-making organizations. My name is Richard Muller. I'm an advisor with GrantBook, and I will be your moderator for today's session entitled Impact Investing, the What and How for Foundations. Just wanted to also just mention that GrantBook is pleased to be presenting this webinar as part of our ongoing commitment to provide leaders in the grant-making sector like yourselves with the services and support they need to manage their activities, whether that be helping streamline your grant-making processes, engage more effectively with your constituents, or integrate impact investing into your organization, as we will learn about today. A couple of administrative items before we get started. First, you'll notice that all attendees will be on mute during today's webinar. We do, however, encourage you to submit questions in the question area at the side of the GoToMeeting viewing pane. We will have about 45 minutes of time today for our panel discussion, after which there will be time for your questions. So please submit your questions as you think of them during the session. And now on to our discussion. It gives me great pleasure to introduce our two panelists today, both of whom are leaders in their fields. Joel Solomon is chairman of Renewal Funds, Canada's largest social venture capital fund. He also serves as a senior advisor with RSF Social Finance and is a frequent speaker on topics around social capital. Renewal Funds invests social venture capital in early growth stage companies in North America and strives to deliver above market returns for its partners while creating positive change. Erica Barbosa-Vargos is the Director of Social Finance for the J.W. McConnell Family Foundation, a private family foundation funding programs to foster a more innovative, inclusive, sustainable, and resilient Canada. The foundation's purpose is to bolster Canada's ability to address complex social, environmental, and economic challenges by developing, testing, and applying innovative approaches and collaborating with partners in the community, private, and public sectors. Joel and Erica, welcome to today's sessions, and thank you very much for agreeing to participate in today's discussion. We're going to start off with each of you providing a bit of your own perspective on the topic of impact investing for foundations. We've all been reading more and more about impact investing and how managing impact investments with both financial and social impact criteria offers the potential of mobilizing a huge base of capital within the foundation sector in new and innovative ways. Joel, could you share with us your point of view based on your own background and experience?
I'd be happy to. Thanks, Richard. I've been working in this field or its antecedents for several decades on the belief that business and investment is a powerful tool for social impact and for making the world better. And we are clearly at a key inflection point right now where the idea of aligning investments with values, mission, and purpose has become widespread, and the demand is growing. Still young, still early, a field that's not fully invented, but as many disruptions going on in different parts of the economy and society, this kind of investing is here to stay, and it's going to grow, and there's a lot more to learn about it together as we go forward.
Thanks, Joel. Erica, what's your perspective based on your own personal history and your position at the foundation?
Hi, Richard, and thank you very much. I have to agree with Joel and be very thankful to the work that he's been leading through Renewal Funds. Thanks to Renewal Funds, the foundation was able to start experimenting in more depth the field of impact investing. I have been with the foundation for 3 years, and much of the work apologies, I'm just losing my voice a bit here. Much of the work that the foundation has been leading in doing in impact investing precedes me joining, and one of the interesting things that we're seeing, and I guess where we see the field moving at this moment, is that there's a diversity of approaches to impact investing. How the market is evolving is very, very exciting for us. We have been able to ramp up our activity over the past few years, but recognizing that we're still learning, and probably that's not going to change with all the continuous evolution of the marketplace. But secondly, there's not one way to get involved in the space, and that's partly due to impact investing activities being the result from internal and external opportunities and enabling factors converging. And you have different foundations that are approaching this in many different ways, and there's not one right way to do it. The other piece, I think, that we're seeing is as we're experimenting more in this space, is that there's still quite a need to do some market building, experimentation, and innovation. In some cases, because of just stakeholder idiosyncrasy. So we're starting to see many more products out there in the market, but not necessarily being a fit for funders and foundations demands in terms of whether it's geography or impact domain. But there's also a need to coordinate a lot the activity that is actually happening, and recognizing some of the activity that is taking place in the private sector, in the pension fund world, and other stakeholder groups. And maybe the last point that I would make is that one of the main opportunities that we're seeing is to play a role as active investors in impact investing. So it's not only about allocating financial resources and looking for products so that our endowments are more aligned with our mission, but as we enter the space and do impact investing, there's a great opportunity to leverage other foundation assets that have to do with networks, with political assets, human resource assets, to ultimately leverage the impact that is happening on the ground.
Great. Thank you, Erica, and thank you both. Very helpful to hear each of you in terms of your points of view. I'd like to now ask each of you for your thoughts on how foundations should frame their own discussion on this topic. What are the strategic issues that need to be addressed? What are the potential benefits, and what risks need to be considered? Joel, what are your thoughts here?
Okay, I'll use some examples from our work to help identify what I mean. But first stage is to consider some combination of allocation that will be dedicated to this kind of work, and key are what focus areas one is going to do. Is it local? Is it about an issue? And then what are the possibilities in that field? So in our case, we focus on organic foods and green technologies as our primary work, leaving a little room for other things that may not exactly fit the box. The third thing that a foundation and everyone needs to figure out in order to do this kind of investing is, where is the expertise? Is it internal? Is it external? Is it a combination? Any direct investing, and really any investing, requires a certain type of expertise, and the expertise to do impact investing may often come from outside traditional wealth managers, and that's a challenge point that is a real hurdle and needs to be considered. Richard, should I carry forward on to benefits and then have?
Yeah, that'd be great.
Okay, so there are some incredible benefits. number one, I would say, is this is, in my view, the future of the economy. This is not something exotic and different. It's a new point of view, but it is the future of the economy. And if we're talking about foundations or high net worth individuals, there is a set of resources, and we have some kind of mission and purpose around that. Particularly for foundation benefit, there is a mission, and this kind of investing should potentially advance that mission. Secondly, there is a diversification aspect that classic portfolio theory would suggest more generally. This might be a new kind of diversification and alternative investments, but it does provide different exposures, and one can be in low interest loan fund kinds of instruments or affordable housing funds, and in a down economy for the stock market, you buffer your return rate and may do better than conventional investment portfolios are doing, and of course vice versa, but it's a balancer. And then there are growing constituencies that matter to any of us. This is a generalized trend that has to do with technology and information and larger changes in society, but it also has to do with social license and with satisfying the hopes and dreams of constituents, be those community members that are looking at a foundation, family members that are involved in the deployment of resources, and the general public. That's a very important benefit. And then the risk part, of course, is the challenge. It's important to assess the overall portfolio, what one's strategies are, long-term, return rates, liquidity, and the same as one would do with historically. The field of impact investing, if you define it broadly, is beginning to fill the bucket in every different asset class with alternatives of some kind or another. One can assess scale and liquidity and things like that, but there are a growing set of options, and we're going to see more and more of this coming. Second, there are large kind of meta issues, global issues that have to do with what has been considered modern portfolio theory, which eliminates a lot of externalities often. And as we're seeing in the divest fossil fuels movement, whether one agrees or disagrees with that, there's a growing debate about the long-term valuation of assets that may change due to societal pressures, environmental pressures, and other ones. So that's a risk of any portfolio in every direction, and it, of course, is a risk of impact as well. But however, impact may be used to mitigate other risks. And then finally, I'll say that capacity to manage this kind of investing. Renewal is one type of intermediary. We're a fund, and we put together lots of investors, and then we go out and do the work of placing that money and providing returns. Similar to all wealth managers, who are intermediaries that we delegate to take care of financial management. So this dividing line between the use of intermediaries and then more hands-on direct investing is a very important one, and often a different kind of internal skill set and capacity is necessary. And I'll stop there.
Okay, thanks, Joel. Erica, what can you share in terms of how your foundation has approached impact investing?
I think that a couple of the points overlap with what Joel was just mentioning. I agree that defining the focus of impact investing is one of the starting points and very important. At McConnell, we have it's almost the greater opportunity given by our very broad mission that has allowed us to work in multiple sectors, multiple domains. So everything from food and entrepreneurship to right now we're working on youth mental health, sustainable cities, infrastructure, energy. So really we can look at a broad range of domain areas. But if you're a foundation that is a bit more targeted in terms of domain, one of the things that within each domain has been very useful for us is to, for example, if you're focused around education and you start to look at what the opportunities are in impact investing in education, at first it might seem that there's not many opportunities out there, but if we take a systems approach to education and start to focus also on drivers of education like nutrition, like infrastructure, etc., then it can widen the scope of opportunities to do impact investing. The internal versus external capacity, I completely agree. I want to repeat what Joel said because it's spot on. In our experience, we have built our internal capacity. We have 2 dedicated staff that myself and another person that looks at each deal, begins the due diligence, but we're still combining that capacity with external support, depending on the domain. When we need additional domain support of experts that we might not have within the foundation. And the third point would be that is essential is figuring out the governance of impact investing and who's making what types of decisions at what point. In the evaluation or management of the portfolio. In our case, program staff are highly involved at the earlier stages when we're looking at the strategic fit and domain fit of a particular deal within the mission and of the foundation. Subsequent to due diligence, we work very closely with our investment committee, and it's not always so that's something that is very important to define in terms of processes. In terms of potential benefits, I think, well, the first point that I have there, leveraging impact, goes in hand with organizational coherence, and it's a little bit what I was mentioning earlier, where now we have an opportunity of thinking as we get involved in impact investing. It's not just about the money that goes into that portfolio, but we can start to think strategically about how to combine our grants with our investments so that the impact and the resources that are coming into a particular domain and area are able to create much greater change than we would with a little bit of grants here and investment somewhere else. And in terms of satisfying constituencies, I think that we now have, as the implementers and organizations are also starting to shift their business models, the way in which they're delivering impact. We're seeing a growing number of organizations that are more in the hybrid space between for-profits and non-profits. So being able to respond to that evolving constituency is very important. In terms of risk, I mentioned sector readiness, and I mean this very, very broadly. It's not just about organizations being ready, but I think everybody that is getting into this space, we need to realize that some of these transitions do take time, and sometimes we get overly excited and we want to see things implemented very quickly, but we have to be careful that we're not developing because it's a market that has so much potential and so much opportunity, and as Joel was saying, is here to stay. We want to do it right, and sometimes that requires having a bit of patience and making sure that we work with a lot of nonprofit organizations and charities that are starting to implement slightly different business models to become less dependent on grants and be able to do more revenue generating activities. But it's not a quick shift. It does take, it sometimes changes in culture, in processes, in different ways of working. So just being conscious and aware of that. Great.
Did you want to share a little bit more on this slide in terms of how you manage some of those issues in terms of your portfolio?
Sure. So I think that, well, this is a framework that has been quite helpful for us. as I was saying, in terms of what this all means for a private foundation, for us, it's helped us shift, I think, even how we're attempting to address and where we see our role in terms of social transformation. So now we have an opportunity, we see, to address societal challenges differently. If we look at social finance as an entire toolkit of financial assets that we can deploy in multiple ways, and this includes grants, program-related investments, mission-related investments, and even some responsible investing practices on the endowment side, we now have an opportunity to say, okay, within a particular domain, what is the societal social challenge or social outcome that we're trying to achieve? Who in the system is better placed or is addressing some of these issues, and then accordingly deploy financial assets. So it might end up being that we build a granting initiative because the change is being led primarily by community sector organizations. It might be impact investing because the solutions lend themselves to investments to go to scale. It might be a combination of all those assets. So the key is that we can strategically start to combine all assets across the spectrum as we think about leveraging impact on the ground.
Thank you. Erica, let's continue with your journey for a while longer. So from your experience, what skill sets do foundations need to address if they want to become active in impact investing? And how did you address that at your foundation?
I think that it's the obvious skill sets that you would think to run any investment fund. So financial skill sets, essential and crucial. We work very closely with our investment committee, with our finance department, and we brought on board our social finance analyst. She has very strong financial and business analytics skills and comes from the solidarity finance background. But I would say that in addition to that and complementary to that, strong program and domain knowledge. So the way that we do, and we'll see it later on, the way that we look at any deal and impact investing opportunity, the first main point is the programmatic and the social impact lens through which we look at that opportunity. But then as we're conducting the due diligence and as we look at how the deal might fit into our portfolio, it's like any other traditional investment would fit. We don't see for us, impact investing is not about trade-offs between financial return and social return. It really depends on the deal, but the rigor that you need for any investment is equally applied in this case. And maybe the additional pieces that has been that we think is critical is understanding the nature of social enterprise development, of evolution of social innovation to scale, because it's quite different than a regular non-social business. So we need to understand what is the growth pattern, what is the nature of risk for social enterprises, and we've been fortunate to work have already learnings from the social economy that have years of experience understanding this, and analytical tools that we've been able to integrate into our own systems. And in terms of the resourcing for these skill sets, we're seeing it varying to great degrees. Some people and some organizations are outsourcing some of that capacity to conduct due diligence and recommendations based on a specific mandate that is set by the foundations. In our case, as I was mentioning, it's a combination of both. We do a lot of the work internally, but then bring on additional external expertise on a case-by-case basis.
Great. So Joel, as Erica just mentioned, your organization works with foundations closely in this area. Share with us, please, some of the ways that you see foundations and your clients addressing the skill set issue.
I'll do that. I just want to take a moment for those of you that may not be from Canada and not aware of McConnell's leadership, but also what we just heard was a phenomenal overview of what it takes to implement this kind of work. And I just want to acknowledge that the leadership that one foundation can make in changing the landscape across a larger region is really important. And also that in the early stages of Renewal, I was part of a small family office that had a strategy of integrated use of capital with a systems approach, similar to what Erica mentioned. And this toolkit that one can have of multiple different types of finance and leverage is a very important way to enhance the mission that might be done by charitable grant making as well. So this is just a great model, and I think everyone should be fortunate to get to hear about it. So in terms of our screening, fairly simple. It is mission first. We call ourselves mission venture capital, sometimes social venture capital, but we want to know that the very product and service is going to make a contribution that is positive and has some impact. We also want to understand the entrepreneurs and the ownership of the company and believe that they share that, and that it's more than simply a hot new way to make some money, because over the time of an impact investment that can become very important. Definition of impact, of course, is very, very broad, or it's not clear exactly what it is, and some of us might define it as simply being in a certain industry, and that's fine as well. First, mission. Second, of course, is the financial screen. Can this succeed? Does this team have the resilience and ability to adapt to the unexpected? One thing that we generally know about business plans is that they don't happen the way that they're envisioned, and there are always bumps in the road. But so we want to understand that as best as we can and look into the company as deeply as we can take the time to do. And that's part of the due diligence. And so the due diligence can go very far-ranging. In our case, we have responsibility for millions of dollars of many, many dozens of other people's money, and we are fairly broad in the type of due diligence, from getting referrals and talking to various parts of the team and to the board members, and studying the competition and the field and suppliers chains, and how the company is handling its own struggle with mission and impact internally. There are tools like the B Corporation that is a measuring tool that is allowing a certification for companies. We've taken that on for our fund, and we strongly encourage portfolio companies to do the same. And we use those tools in the due diligence phase as part of our checklist to understand what the kind of landscape of the company. Then there's the investment decision, and we have a group of senior people that have lively discussions and talk it through, and how does it fit, what are the risks, and are we willing to get involved and in many cases go on the board and become part and effectively a partner with the company going forward through the ups and downs. And we come to our decision, make the investment, and then it becomes part of our Renewal 3 portfolio. Renewal 3 at this case was a follow-on fund from prior funds. And one of the things that happens, particularly when you're doing venture investing or equity investing in a non-liquid company, is you don't know for sure the exit. And I want to add that to this chart here is a conversation. Some people are very long-term investors. Often family offices want cash-creating long-term positions. With many intermediaries, ourselves included, we make a promise to return the capital with a good return rate. So we have to have a conversation with the entrepreneurs, their board, etc., about their plans. And are they building for a strategic sale? Do they want to own the company long term? And if so, we want to be sure that our capital can fit for them, and we have a discussion about how they will get us out with good ample notice and our support over, when the appropriate number of years has passed. So I think I'll stop there with that. That's a good overview.
Okay, great. Erica, from your perspective, your foundation has developed some very interesting decision-making processes around impact investing, and can you share some of that with us now?
Yes, happy to. And this, maybe just to be clear, this is all like the newer things that we're developing. Sometimes it's very easy to look in retrospect and think that there was an entire strategy, a set of tools that were put in place before we started becoming active in this space, but it's rarely the case. So this is sort of like the last iteration, thanks to the initial experimentation that took in place, which we have to be thankful in part to some of the early intermediaries like Renewal Funds, and we'll see in our portfolio we're participating in both of them. But what we have right now in terms of process, and that is what we've landed on given the previous experience, and also some of how we're assessing new opportunities, is this framework where whenever we're looking at an impact investment, and we're doing impact investing across asset classes and across domains, on the right-hand side, you have everything that is presented by the potential investee, and that goes through screens that are like any other investment. You're looking at the organizational capacity, value proposition, risk assessment, sustainability screens, just general ones. Maybe the most important part, though, in the process of impact investing is the additional mission layer that comes first and foremost. And that's very much defined at the foundation level, or based on what our interests are and what our priorities are. And that's where we look at the strategic fit. The strategic fit is not only how well does this align with our current priorities and objectives, but we look at things like, okay, given the issue that is trying to be addressed here, is this the right investee organization to address it, to what extent? And maybe the most important part is also we ask ourselves, what's the role that the foundation can play above and beyond just the financial resources? Then eventually the ultimate deal structure ends up being the result of a conversation between those two. And it doesn't mean that there always has to be a high role that the foundation has to play, or it doesn't, the degree to which we give more or less weight to some of those questions in the strategic fit is going to depend on the deal. It's going to depend on whether it's a program-related investment, a mission-related investment, and it's going to depend very much on the domain.
Great, thank you very much. We've touched on this a bit earlier, but I'd like to expand the discussion a bit on the role of outside advisors. Joel, perhaps you could just start off here again with, where do you see the need for advisors? And Erica, from your perspective, what should foundations look for in an advisor?
One, it's often hard to get enough advice. The complementing of the existing expertise is crucial. We go into any due diligence assuming that we do not know everything or even enough about the particular industry, positioning, geography, product, competition, etc. And we will often go and contract with expertise that with people who maybe have spent their careers in specifically that area. Let's say we're looking at a green building product. Well, there's a lot to know about building efficiencies and construction methods and the marketplace and things like that. So support for the due diligence process is very important. In managing a foundation, I felt this, or earlier than this, I felt exactly the same way, that often with a foundation grant, extensive due diligence happens, and people are on staff full-time searching the field and being familiar with the field and understanding it, etc. There's nothing different about impact investing. There's how do you, this thing that Erica talked about in structuring an investment can be a complicated decision depending on the scale that your entity plays in the business. If you're a small investor, you're going to go along with the structure that's presented. If you're a larger investor, or you're the kind of the founding investor, let's say there's a real estate project in your city that some nonprofits are trying to put together to buy property long term and create a financial base for themselves, you're going to be involved in the structuring of the deal, and you want to have that kind of assistance. That may be the most important single piece that happens, is how a relationship and investment is structured. And then there becomes the monitoring, which I would broaden to say, as Erica just pointed out, it's monitoring. So you want to, of course, keep tabs. You want to know that there's good quality, accurate financial record keeping, and one wants to have the support like you would on any other financial transaction if it's not your primary skill set of that kind of expertise. There are often legal issues that can come up, but there's the monitoring, and then there's the support. We enter into very collaborative relationships with the organizations that we invest in, and find that even sometimes it's not necessarily that we have the specific expertise that's being looked for, but the entrepreneur is buried in the day-to-day of the business, and as are all the people involved in business, and we can sometimes access other resources just through our networks that may provide very high value. And what one looks for in an advisor, I believe, is very similar to what one should be looking for in all partnerships and relationships that where we're counting on other people, but professional skills. And maybe this one is slightly different. I want to see authenticity and honesty, really, of course, in any relationship. But when we're thinking about combining making money or preserving capital with attempting to meet certain kinds of missions and impacts in a community or in an issue, it's really valuable to understand, do people really get this in their bones? Is this real for someone? Because we can all claim to care about things, but is there depth there, which is a different kind of credential chart than are you an effective person to look at financial reports. So, and then of course track record, the always important. I don't think I need to say much about that. The organizational and cultural fit, in many ways, at least for ourselves, is the most important. I've had a principle for my business career, which is are these people that I want to be in business with, and can we go through hard times together? Can we go through challenges and unexpected bumps in the road together and handle it well? Because it is under stress where, of course, more parts of personality and behavioral choices are revealed. So cultural fit, which extends to organizational fit, is this the kind of company, relationship, circumstance, and head into the future together, facing what may come, that we feel is good for ourselves and our constituency and for our organization?
Thank you, Joel. Erica, anything you want to add to this?
Not much, actually. I think those were great points that were raised. Maybe just to say that the degree, it really, in our case, it's depended on what we need the advisory for and to what extent how much of the work is being outsourced or not. So obviously, whenever we're delegating or we're looking for external support to take on much larger pieces of the work that include some decision making or some going and sourcing for things, it's really, really important that the cultural, the values fit, and that they understand what the intentions of the foundation and its multiple partners are in order to find the right opportunities to bring back to us. But in some cases, we've needed external support for very, very specific things. And in a real estate fund, for example, we did much of the due diligence and then just needed external support on going and looking at the buildings and the projects. That is a capacity and an expertise that we did not have within the foundation, but it was very, very narrow and targeted for that particular piece. So I think that it would depend how much is going to external advisors versus being managed internally.
Okay. We talked about structure a bit there on the previous slide, and I'd like to just take a little bit deeper look at how impact investments are structured as part of a foundation's portfolio. Erica and then Joel, could you speak to how PRIs and MRIs come into play here, Erica?
Yes. So you have a point on PRIs in Canada and the U.S. I think it's a very important point because PRIs in the U.S. So U.S. foundations have benefited from legislation for this for many, many, many years, since 1969, I believe. In Canada, we've had the guidelines for PRIs coming out after 2010, and the main difference between the two contexts is that in the U.S. they're able to use resources from the grant budget to dedicate to program-related investments, whereas in Canada, it's money that is coming and being segregated out of the endowment core. So it's no longer within the fiduciary responsibility of the investment committees, but so not being counted as part of the endowment, which enables us to still be able to use apply some concessionary terms on the investment, but it's not part of the grant quota unless there's a loss, which is a nice incentive that comes into place. And I think that it's a nice structure because we're not replacing any grant money to do investment. We're really taking money out of the endowment, but in the case of losses, then it can be claimed as a charitable expense.
Thank you. Perhaps I could also get you to look a little bit more specifically at your own experience as a foundation in this space and share a bit more about how you manage your various impact investments.
Sure. And maybe what I will add to that, to the program-related investments, I think that's the instrument that I think foundations can really leverage to play a catalytic role, because given the relaxation of fiduciary responsibility around them, or the types of instruments that we can use, those are the ones where we can play a much more catalytic role, take first loss positions, absorb a little bit more of risk, and if strategically deployed, can really help leverage private capital coming into this space. What we're looking at here is our current portfolio, and the three first investments on the left are our program-related investments, and everything from ethical funds all the way to the right are our mission-related investments. So the main difference between the two being program-related investments, we're tolerant to below market rates of return, and mission-related investments, we're looking for market and above market rates of return. I think that maybe the main point of our portfolio is that it shows some diversification across asset classes, and also there's just a wide range of expected rates of return on each of these investments. So a lot of times there's the question about, is there a trade-off, is there not a trade-off, and what are the opportunities of impact investing At this point, we're exploring impact investing on a wide range of areas, domains, and asset classes, and it's looking promising so far.
Thank you. Very, very exciting. There was another specific example you gave in terms of an investment. Do you want to share a little bit more about that?
Yes. So this is an area where an example where we're seeing the opportunity to combine our investments with our grants to leverage impact. And this particular project relates to the issue of a deficit in housing on reserve communities of Indigenous communities in Canada, where we have an estimated and probably underestimated deficit of 80,000 new units that are needed and over 60% of existing homes needing repairs. And housing is a very, very large issue where leads to all sorts of secondary consequences around health, around economic development, kids being taken into foster care, and multiple issues. There's an organization, Abstin, based from the Huron-Wendat Nation, right outside of Quebec, that 10 years ago started a revolving mortgage loan fund using savings from the community plus some subsidies from the government. And what's happened over the past 10 years is that individuals no longer depend on government subsidies to have homes, but rather access mortgages to be able to build their homes and own their homes. And they have, in 10 years, developed an entire housing market in that community, which has led to enterprise development, services around construction, maintenance, multiple things. And they have over 405 clients, 0 arrears, beautiful model and economic transformation of the community around this housing issue. So last year they were looking at with increased demand from other communities for their services, they were looking to expand their fund, and looking at just the business model and the solvency of the business case, it seemed like a pretty interesting and solid model to expand. But because it's on reserve and all the regulatory issues around property values and no access to security on the homes and the loans, a lot of financial institutions and commercial investors still see it as highly risky to come into this space. So ultimately, what we ended up doing is providing in a partnership with the federal government, providing some grant capacity to do some of the work at the community level to start to think about different financial instruments to operate in the same way as Aspen was operating in Wendake, and provided a 0 interest loan into the fund. The government matched our contribution both with a grant for the capacity building as well as a non-reimbursable contribution into the fund, which immediately enabled Abscan to make a much more interesting proposition to commercial investors that are also contributing now to the fund of this project. It's a $2 million pilot project before they expand to 15 other communities that work. So I think that this is just to exemplify the interesting thing about combining grants with investments, as well as the collaboration between foundation and the government to enable private capital to come into a before untouched domain by commercial investors.
Yes, I agree. Very, very creative approach. Joel, briefly from your side, just what funding criteria have you been using, and maybe let's just briefly look at a couple of your examples as well.
Okay, I'm going to slip in a bit on the types of impact investing, and those of you that were watching closely on Erica's chart saw that Renewal 2 and 3 funds were a significant part of their portfolio, and vice versa. And I want to talk about another of the less tracked impacts of impact investing can be is, in our case, McConnell's early commitment to Renewal was worth far more than the millions of dollars reputationally and in terms of credibility. And McConnell's dollars into Renewal have leveraged these many dozens of other people and quite a few millions of dollars from others into this kind of investing. So we have, of course, a large burden of responsibility to succeed with it, and our success has its own set of ripples, and so there is this kind of systemic rippling effect, and McConnell makes a specialty, at least in my understanding, of attempting to seed the overall field while they're doing and modeling their own investing, and that's the principle that can be applied elsewhere. In terms of the funding criteria, so we want to deliver significant impact. We need it to be in one of the sectors that we have chosen to specialize in and that we've promised our investors. There is a scalable business model, which means that it can grow and be successful. And we go into companies that range from $1 to $20 million in sales. We have chosen not to use this fund for startup or earlier stage than that. We're looking at established businesses that have a lot of proof of concept, but now need capital and many other things that go along with growing from $1 million in sales and to many multiples of that. We have chosen to focus only in Canada and the US. That is already a very broad geography, but we're doing it. And I'll just move on now to a couple of the companies and give you an example. So Alter Eco, the first one, is one of the few for-profit, fair trade, organic food commodity and value-add businesses, meaning they work with farmers in Bolivia and Peru directly to provide organic quinoa that has been paid a fair price directly to farmers and bring it to North American markets. And then they're also involved in chocolate and mixing various fair trade organic ingredients. And I won't say their specific sales because it's a private company, but it's in the 5 years we've been involved, this business has grown by about 8 times its revenues. And that, I think, is because of growing consumer demand for more and more features that have them feel good about the products that they're purchasing, how they're created, how they're grown, and what's in them, and what the effect of them is. And to give a different example, I will pick the aquatic. I'll go into aquatics informatics, which will demonstrate the green tech side of our work. And aquatics informatics was an environmental biologist who was standing in streams and collecting samples and using Excel spreadsheets laboriously, and very frustrated with how antiquated the information gathering process was and how slow it made his work. And he came up with a software product that did data analytics and various other analysis that tests water quality and various features about water, which I think we all know is going to be increasingly important, and has gone from a small Vancouver company with a solid product into an international company that won the U.S. Geological Service lead software and is now going into China and elsewhere as demand grows, and has created a good 65 jobs so far in Vancouver. Those are a couple of examples.
Thank you, Joel. That's great. Just then, finally, I'd like to have each of you share your thoughts on where you see the impact investing space going within the foundation sector specifically. What should we be expecting as we move forward? Perhaps, Joel, you can continue with a few thoughts, and then Erica as well.
Okay, be happy to. So I said at the very beginning of this, we're still very, very early stage. And I like to compare it to something I can tangibly understand, which is the growth of organic food. and cleaner food, which I first got exposed to 40 or 50 years ago and was obscure and slow growing at first and not very well understood. And then it got professionalized steadily and information got better distributed to the public. And now the organic food sector is a very robustly growing industry that probably most people know about, yet it is still well below 10% of the North American food dollar. There are fortunes being made there, and it's still an industry in its early stage. So how does that relate to foundations? Well, I like to take that premise further and say, this is no longer an exotic thing to do. This is the modern and future economy. Because we're understanding limits to growth, our impact as a species on food systems, other species, ocean systems, climate, etc., and it's becoming increasingly just common sense logic that we have to be more efficient with resources. We have to understand their use from cradle to grave. We have to understand toxicities and potentially negative impacts on ourselves, workers, community, and the environment. And we know that we're going to invent more effective transportation systems, energy systems, built environment, food systems, and pretty much every sector of the economy. As information spreads and skill and technology increase, we're basically going to reform the economy for the next era of what it's going to look like. That's going to enable the next 3 billion people to come onto the planet, and that we might all have a chance to enjoy a good life together in some way. So foundations have a very special role in society because they are tax supported, they're public supported in some ways through tax laws. They give us a chance to represent and express our highest values and what we believe in and care about in the world. And they can experiment and do things differently sometimes than the private sector can. So foundations are looked to and held that way by the public and usually by the governance of it, the people who run it. And so for foundations to find each their unique part of this that you can participate in, you can start slow, you can do some fairly easy things. Many, if not most, wealth managers are beginning to understand this impulse, if not the exact language and how it's all done. But major financial houses are creating products that can fit into the typical portfolios they provide, even if we simply do some screening for industries that we like better or like less. Each one of these acts, each act that a foundation chooses to do with its asset base and with its grants base to express a vision of the future that aligns with what the foundation cares about, is an emerging opportunity that was perhaps overlooked or neglected in past decades as asset base and how it was deployed was separated completely from the granting base and the philosophy and theory of change that might have happened in the granting base. So the opportunity is huge. We all have a role to play, and foundations have a special version.
Thank you, Joel. Erica, from your side, where do you see the trends heading?
Yes. So maybe I would like to build on one of Joel's points, and we did skip over a piece that reinforced even as the importance of intermediaries in this space, because even as we're thinking, we can develop frameworks, we can develop strategies. If I can tell you from our experience, if we had not had such a successful and trustworthy experience with renewal funds, we probably would have been in a very different place at this moment, because for us, it was our involvement with them and our investment committee, which we're very fortunate is highly interested in this space. But after the experience with one of the funds, which proved to be legitimate, as solid, as robust, as diligent as would any other fund, if it wasn't for that, we wouldn't even be able to have much broader conversations, because if we're looking to move the mindsets of investment committees and institutions, we can't do it just by convincing from an ideological standpoint, and it's not the right thing to do out of the heart. It also makes business sense. And so I think that our foundation work is only going to be able to advance to the extent that there's others, more robust ecosystem of intermediaries that can be properly integrated into investment policies of different foundations. And maybe just to conclude on some of the trends, I think that one of the fascinating things that we're seeing is that there's an evolution not just in the foundation space, but there's also evolutions in the corporate sector and how the corporate sector is doing venture capital, where it's starting to intersect and overlap with impact investing. We're seeing evolution in this socially responsible investing, the public capital markets, as well as pension funds and other institutional investors or sovereign wealth funds that are starting to look at alternative investments and esoteric investments and new opportunities in what we would consider impact investing. And there's maybe what we need is to have many more conversations beyond our usual networks to understand how the different stakeholder groups are evolving and where there's starting to be convergence towards more sustainable investing, towards more impact investing, so that we can find synergies to collaborate and help advance and accelerate the field.
Thank you very much. And so on behalf of GrantBook, Eric and Joel, I want to thank you both very much for sharing your experiences with us today. Very valuable lessons that you've shared. I know that we're right up against the time, and apologize for those who had budgeted just for an hour, but we would like to take a couple of questions. There was a question, Joel, that you had mentioned that business plans don't always unfold the way that they are written. And the question was, what's been your experience with startup methods that take a more iterative approach to testing and developing a business model?
Okay. So planning is crucial and important, and particularly in a growth stage of a company or growth in the early stage, and I think this goes with similarly in the grant making space to nonprofits. It's more about the individuals and their capacity and the team that is around them and that they have access to, and their abilities of adaptation, listening, understanding, and adapting, that ultimately become more important than the plan that was maybe made with a lot of intelligence, but conditions change that you can't control. So you want to figure out who you're going to be in business with, and how things will go when the plan changes, and is there an ability to recreate the next plan? Is it realistic? Are the resources there? Can it be executed? And is there a team that supports it? And is there a constituency that supports it?
Great, thank you. One other question around a perception that continues to be expressed among many in the sector, that social investments lead to lower returns. How would either of you address this perception if you were at a foundation just starting to look at impact investing?
I would say it really depends, and there's a range. I find if you look at our MRI portfolio, if we went back to that slide, Renewal Funds, just to give an example, have performed better than some other deals in the main core endowment portfolio. We're also doing impact investing in the public markets where there's absolutely no trade-off. And I would say that in some cases, just to step back, in some instances, the trade-off is actually a choice that we make, not something that is inherent in the business model or the nature of the work of the organization. So we might decide to be concessionary on our financial returns, because then that enables the organizations to do something much greater on the impact side. So in the case that I was giving about AppScan, for example, there was absolutely no business need for us to issue a loan with 0% interest, but it was helpful to enable some other investors to come into that space, and we're doing it only for a temporary period to prove the concept. So I would say it's going to vary. It's going to depend. In some cases, yes, there might be a trade-off depending on the project that you're in and the sector that you're in, but it's by no means something that comes inherently in impact investing across the board.
Okay, great. I think that's about all the time we have today. I just one final perspective to share is this recent article that appeared in the Chronicle of Philanthropy. I believe the article will be a candid and provocative point of view for many of you to follow up and hear more about today's webinar topic. We'll be sharing this link to the article as part of our follow-up email to each of you, thanking you for your time today and joining us on the webinar. Some of you have asked whether the presentation is going to be available. There'll be a link to the presentation available at the GrantBook.org site later today. And so again, on behalf of both Joel and Erica and our host GrantBook, we want to thank you again for your attendance and participation today. We look forward to seeing all of you back for the next Spotlight Series webinar next month. Bye for now.
Thank you. Bye.
Thank you.